Hi, I'm David, and I'm here to talk to you about cryptocurrency price analysis for Thursday, May 16th, 2019. Today we'll be talking again about Bitcoin because the price is on an absolute tear. Currently, we're holding a little over 8,000, but can we push on to 9? Push on to 10? What happens after that? Or do we take a dip here, fall back down a little bit? Well, without further ado, don't forget to like and subscribe below. Let's get right into it. All right, here we have Bitcoin on the hourly. We're going to start off on the pretty close time frame, zoom out a little bit, talk about what's happening in the larger scale and whether we can get up higher or if we're going to slip back down lower. But first off, what you might notice is that we have been performing wonderfully above this 50-hour moving average here, really defining our upward pressure. And for the time being, there's no real reason to be concerned that that's going to fail us. We've gotten some solid support above 8,100. And we've been testing up, we've been getting stopped out, even as I've been recording this, at about 8,350, which is where we got stopped out previously. I honestly thought we might test up to 8,500. I'm still leaving the level there because it's kind of a muddled zone between 83 and 85. We're going to need to get through all of it to get above. We'll talk more about what getting above that looks like in a minute. But I also want to talk about a little bit for the possible bearish scenario. We're going to I like to get through the bearish scenario first, as you've probably noticed. And then we can talk about the bullish scenario because it's more fun. So if things don't go super well here, we could get rejected here off of about 8,350, or even if we manage to get a little higher, if we can't get above 85, we'll probably test back down to about 81. If that breaks, then we do also have some decent support at about 7,800. So things are looking like we have a few safety nets in the short term here. Now I'd like to switch it out to the daily to talk about kind of a larger series of indicators that have me a little bear concerned, but I'll show you. All right, now on the daily, the couple of things that have me a little bit concerned are our RSI is a little bit high here. It's actually very high. We were here recently with this push up, and we're back there again. Before that, we have not been there in some time. In fact, going all the way back to December of 2017 was the last time we were like at or above these levels, besides just recently. But as you can see, even with just recently, just because we're a little bit high doesn't mean I'm saying, oh no, it's going to crash for sure. Because last time we got it really high, but we just had some sideways consolidation, went on and pushed higher. That's, when I get to the bull scenario, that's basically what we're hoping for. But the other thing that has me concerned, in addition to the really high RSI, is that just we ran up really fast. It's great, but we ran through 6,000 and up to 8, almost 8.5 very quickly. And as we know with historical, like things that run up that fast tend to retrace back down. It's not uncommon. Going from 6,000 up to 8.5 and then back down to 6,000 has specifically happened before. I'm not trying to be overly doom and gloom. Just be aware it's a possibility. Just be aware that things that run up this fast can drop back down very quickly. Now, okay, bear hat off, bull hat on. So let's say we don't drop back down. What are we looking at? Well, one, if we don't drop back below like 8.1, then what we really want to see probably is more sideways consolidation just for a little bit. Get some real support here at above 8,100. Because if we keep running up fast, same logic, we could run back down really fast. It might not hold. We do have good volume in. I always talk about how important seeing buy volume is. We do have some pretty good buy volume. But we're going to want to see at least sideways consolidation holding probably in a little bit of a channel between like 8,100 and 8,300, maybe 81 and 85. Once we clear 85, things get a little bit interesting because then we start kind of climbing to 10,000. So first, okay, 85 to 9 is pretty clear from what I can see in terms of historical levels. Once we get over 9, and I know we all can't wait to get over 9,000 because we can all bust out our Vegeta memes. I get it. So then 9 to 10 isn't too muddled. There is some resistance at about 9.5, right about there. I don't have it marked because two reasons. One, I have enough lines here already, and two is I'm going to come back to it in a minute, and you'll see why. So putting that aside for now, let's say we get to 10. That's great. After we break, 10 is going to probably give us a bit of resistance. I think sentiment will be really strong as we push to it, so we'll see. But it's a pretty important level. We might get rejected off of it. If we do, that could play out that whole retracing back down scenario, but we'll see. Okay, let's say we break 10. Where to then? Well, then I'd say our next target, we break 10, it's going to be a lot of excitement. And I think our next ceiling after that is 11.5. And that's going to, why? Why 11.5? And why did I mention there's some kind of hidden resistance at 9.5? For that, I want to get rid of these green lines, and I want to bring up the Fibonacci retracement tool. So let's do that. Okay, so I've adjusted the chart a little bit and added the Fibonacci retracement tool, and I just basically want to show why I was talking about these extra levels of resistance. That you can see them a little bit on historical, but this is kind of going to explain why they're there. And so it's basically, look here at the about 38% retracement, lines with about 9.5 to 9.6. That's why that's going to be a level that I think I'm not sure it'll be too bad, but it is definitely a level of resistance that some people might not anticipate. I wanted to point out that it's there. And then the big one, once we break 10, there's going to be a lot of that upward sentiment. I think that realistically the first level it'll likely get stopped out at is 11.5. There's not a whole lot between those levels. And then this is why. That's the 50%. That's halfway basically back up to the previous all-time high. It'll be exciting when we break that, but I think it's going to provide a bit of a wall for us. But we'll worry about that when we get there. So to recap, I know that was kind of a lot. So let's just say that bear scenario, worst case bear scenario, we lose support below 8,100, 8,000, drop all the way down to maybe 6.5, even 6. I don't think it's that likely, but it's definitely a possibility. Bull scenario, we managed to hold above 8,100 for at least a little while, get some support there, retest 83, retest up to 85, break through that, retest to 9, break through that, retest to 10. That could take some time, but if we can get that support and not have a drop, then it can be a few steps, but I think we can get there in the next maybe few days, weeks, something like that. Well, that should about do it for me again. As I always say, this isn't investment advice. This is just my opinion. Go do your own research and make your own decisions. Until next time, don't forget to like and subscribe below. Good luck with your trades.